Hi guys, welcome to day 12 of the 60-day DAS Trader Challenge. So today was a bit of an up and down day in terms of how many trades I took. I was a little bit upset at myself. I took was it 47 tickets, so 47 executions. Normally I try and stick to around 30, 32, which is about 7-8 trades. So I probably went a few trades over. In terms of my P&L for the day, I was up $112 at one stage, and then went down about 140, and then I came back and I finished 109. Apologies if I'm not being myself. I'm feeling a bit under the weather today, some kind of head cold or flu, so I'll keep this one short today. But it couldn't keep me away from the markets. There you go, still battling on. Okay, so let's go through the trades that we had for today. So this is my trade blotter. I'll sort these by simple. So Adobe was the first trade that we took this morning. Once again, I mean, this strategy is not really complicated. I mean, what I'm trying to do is I'm trying to find weakness after the first 5-minute candle, or I'm looking for strength. If that's the case, I'll go long. And I have to say that I'm going short. It's working a bit better for me, actually, a lot better for me than going long. I am still following the moderator quite a fair bit, I have to say. I'm beginning to make my decisions here and there. For example, I won't take every single trade, or I'll close out a bit earlier. But I've noticed that last 3 or 4 days I haven't been taking all the trades that he has been, which is a good sign because it means I'm finding my own style. But anyway, so this lost the VWAP as well as the 9-day moving average. I think I've got some notes here. So actually, I'll show what I do. Every day I put this together, which first of all, I write down what are the major economic news that are coming out, and then I write down my watch list, and then I put down the ATR of each stock and the float, and then any notes, for example, where I want to go short, where I want to go long. Then at the bottom, just a review and a recap of the day, and then on the back, this is a bit of a kind of blotter journal. Sorry, So I just put some rough notes here to say, when I enter a trade, what's my stop loss, what's my target, number 1, number 2, just so I can recall later on what I did. So for Adobe, I didn't write this one down, but the target was the low of the pre-market, which is here, which is about 144.64. Now this came down nicely, and I covered half my position here and half here. It was only a small position. I think you can see it was just 100 shares because it's just a very pricey stock. So that wasn't a bad trade. That was actually quite a good trade. I was patient. I let the stock work, and excuse me, I didn't get too obsessed with taking profits too quickly. Then we moved on to AMD. So AMD we wanted to go short because we saw that it kind of had this really kind of long wick, and it looked like there was a lot of downward pressure pushing down on the stock, and it couldn't really break above the VWAP at any stage. So I got in here at $13.36, and my profit target on this one was to cover at the 50-day moving average. So these moving averages that you see, this is the 50-day, is the green one, the simple moving average. They have quite a big bearing on as a support and resistance level for a lot of these stocks. So as a little side note, if you're ever going to go long, it's best not to have these moving averages sitting above where you want to go, because normally what happens is that the stock can bounce off those and then come back down again. So what you want to do is, if you want to go long, you want to potentially have these sitting underneath, which is what we have in this case. So this was one of a quick early trade, but it was really nice to see it just kind of reach the target. And as you can see, it bounced right off again, and it moved on. So CA, I don't think we had any luck with. No, CA was just one of these ball buster ones that didn't want to kind of crack down. I took the trade thinking that it was going to lose the VWAP here, but it just kind of kept bouncing off the 9. You can see this blue line. This is a 9-day EMA, exponential moving average. And it just kind of kept popping up here. Then it had a bit of a false break above the VWAP, but I was already out by that stage. So I didn't really want to take too long in this trade, and it looked like it was gonna squeeze up. So I wasn't sure, and I didn't want to be in that trade. Then this one here, this entry here, I was looking to take a scalp to the bottom of the day, a low of the day, which was around 35. Now, I mean, it may not have got there because that's a really long, the target's very far away. But even if we had got, say, 20, 30 cents out of that, that would have been okay. The one, unfortunately, once again, that kind of squeezed up. But you can see it's not doing much. It's just sitting above the VWAP, and it's probably not going to go much throughout the day. FL, how would it go on FL? Oh, FL was a big loser, $195. $191 followed by a couple of small wins and then another loss. So this one, once again, this one what I did is I went short. It didn't work. Then I went long, so I'll show you what I did. So I went short here first at $47, I think 77 thereabouts, and it wouldn't crack. See, this is above the VWAP. This is the thing. I mean, you know, this is another trade. Yesterday I took a similar trade. You know, I kind of followed a person in chat and kind of, you know, jumped in. You know, really, this is not a trade I should be taking. Why? Because when you short, you want to see a weakness. You want to see the stock below the VWAP or below some kind of, you know, strong resistance like moving averages. In this case, you know, it's sitting pretty above the VWAP. What's that? So the VWAP is $46.80. It's sitting, what's that? 47. So it's sitting pretty much $1 above it, you know. So this wasn't a good trade. You know, hand on my heart, put my hand up to say this was a messed up one. Shouldn't have got in here. You know, once again, I have to stop following. I have to just, you know, make my decisions. And like I said, I'm getting better at that, but still relying too much. And on the one hand, you know, hand holding is good for a certain time. This is only day 12 of 60 days, so 2 weeks in 3 months. So we've still got a fair way to go. So these are the little kinks I want to iron out by day 60. And then I went to short it again here, thinking it was going to finally crack and go towards a VWAP, which would have been here. But it was just too strong, and I mean, it actually did crack just a little bit, and I covered here. You can see in 3 or 4 places. I think this is where I made the $30 and $46. But there was a big loss in here as well. When I watch. Oh yeah. So when I went long here, $47.10, $48.10, thinking it was going to break out and kind of move towards a 50-day average because it seemed to be, you know, gaining momentum. So what I did is I flipped. So from going short, I went long straight away. And unfortunately, it didn't work out. I added to my position here, which was a little bit, risky because I don't normally add to a long position. I don't average down. I tend to average up when I'm shorting. So, for example, if you short at $47 and the VWAP is at, say, $47.10, I will add, you know, slightly above that $47. Maybe, you know, I will add at the VWAP if it can't break it. So that will increase my average price to about $47.05, which is better because then you have a higher starting point for when you break down. But when you're going long, it's a bit, I think, in my personal opinion, it's a bit more riskier. So that didn't work out, going long and flipping in this case. So that was FL. Then we moved on to KMX. KMX actually, I think, yes, KMX pretty much saved my day in a way. I mean, you can see how many executions I took. You know, for me, this is just a little bit too many. I mean, okay, half of them were covers, which is fine. You know, when you're covering, that's fine because you're taking small profits and you're adding them to your P&L. But when you're averaging down or adding to your position, that's a bit wonky. It's a bit dangerous. It's a bit risky. It means that you're not sure. So I wouldn't have wanted to have this many covers. But as you can see, I covered, you know, for like a 55. I mean, like I said, these aren't in chronological order, so these may not kind of make sense, but you'll have to put them in chronological order. But you know, when I was taking what they go, so I covered 200 shares, I made $55 here. I covered there, I made a loss, and so forth and so forth. But overall, this was also a trade that, you know what I've noticed? That some of these trades for shorts set up a little bit after 10 o'clock actually. So what I've noticed last week or so is that they don't always crack straight away. You know, you look at Tesla yesterday, not Tesla, yeah, Tesla. Yesterday we traded Tesla. Let me show you what I mean. So this was the 20th, right? This is yesterday. So this is 8 o'clock, was the market opened here. Let's just move this across. So the market opened here, and I shorted this a couple of times, and I covered because it wasn't breaking the VWAP. But you'll notice that by about, what's this? Okay, 10:25. You know, it starts its descent. So the point is, these stocks you may be right on, and you may have guessed the right direction, or guessed. I mean, you analyzed it and you put together a plan, but you know they may not necessarily crack straight away. So you just have to give it a little bit more time. So I've noticed that a couple of times. KR. So that was yesterday's trade. So KR. So KR. What do we do, KR? All right. So this was pretty much break-even trade. You know, went to short here, thinking it was going to reach the low of day. That was a target, 21.87. So profit loss wise, you're looking at from $22. You're looking to make actually not much at all, really. You know, 20 cents maybe. You know, if it drops below there, 15 cents. You know, to make 15 cents, it's a bit of a scalp. And your risk from $22.01, which is where I was, to 22, I think it was, and 7 is 5 cents. So you're looking to make 15 cents, and you're risking 5 cents. That's a 3-to-1 risk reward. It's not a bad risk reward, but there isn't enough meat on the bone there, really. You have to take a pretty big position, and you know, the whole point of the strategy is not to take 1,000 shares; it's to take, you know, a couple hundred, 300, 400. So for this one, I shorted here. I added here at the VWAP thinking it was going to crack, and you know, it got down just a little bit to 20, just below 22. I mean, there was no point covering when my average was about, excuse me, my average was $22.01. So what, for a 3-cent gain, wasn't worth covering. Yeah, covering. So I got out here and I think I broke even. So this wasn't anything to write home about. I took a low floater, MVRX. What I did here was I got in here as the market opened. This is a 5-minute candle. I got in here at, what is it, $1.15, and there was talk in the chat room that it may drop down to this 20-day moving average, which is the orange line here, and that this wouldn't be a bad place to kind of add your position, which subsequently also means you lower your average price, which is what I did. You know, a little bit against the rules of what I just said a couple of minutes ago about adding to a long position. With these low float ones, though, you can find that they just squeeze right up. If I look at my notes, MBRX, where is it? Actually, I didn't write this one down, but in terms of the float and the ATR, I didn't write this one down, but normally I know what the float is and the ATR. Average true range is just basically how much the stock moves, whether it's 50 cents. It's normally calculated over the 14 period. Which gives you a good indication of how much you can expect the stock to move. And the float also gives you an idea of how many shares are available. So if there's some good news, or if there's a push up or squeeze up, you get a lot of people trying to buy these shares, and it kind of just brings the price right up, and these things can really squeeze up. So that was the point of averaging down here a little bit. And I sold half here at $1.21. The goal here was to get to $1.29, which I think, if I go back a little bit, was the pre-market high. So this was the goal, right? So the goal was to make, so my average was about $1.13 when I added here. So the goal was this, from $1.13 to get to let's say 30, at 17 cents profit, and you're risking down to this 20 moving average. So you're risking what, from $1.13 was what my risk was. So really I was risking, this is my average, 13. So really I was risking like 3-4 cents. So 3-4 cents to make 17 is about 4-to-1. So that's a good risk reward, but the range isn't that wide on this thing. So you've got to take a bigger position to kind of make that 10 or 15 cent move worthwhile. So I think I made $45 on that. You can see 2 entries here. And then RHT. RHT was one of these that just didn't work out. I mean, these freaking long weeks. I mean, this is a choppy stock. This is not an easy stock to trade. An easy stock to trade is predictable. In other words, it bounces off support resistance, it bounces off moving averages, it bounces off the VWAP, and it kind of follows certain set kind of, you know, assumptions. But a stock that kind of, you know, jumps, what's the range on this? $97.04 to $98.40. So, you know, $1.40. And what's the float? The ATR, RHT. Let me just check what the float is on this. Just one sec. So bring this over. RHT. So this is the ATR. So this moves on average about $1.75, and I think this is how much it moves. It's calculated over a 14-day period in this case, because you're looking at a daily chart. If you were to go to a 5-minute chart, you would see what's the ATR? 175. You would see that the ATR on a 5-minute chart, I've got it here. You can see it. I didn't want to have this kind of plugging up my chart, but but there it is. Anyway, I've got to go, guys. I've got 1 second. Talk to you tomorrow.